Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Kevin McNew. Today is Tuesday the 17th. We had NOPA crush numbers out. We also had export inspections out, but before we get to that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading up 2.5 cents, soybeans up 17 3/4 cents, and wheat in Chicago trading up 2 cents here today. Kevin, let's talk a little bit about export inspections. What did we see, and did that move the market?
Well, certainly it was within line of analyst expectations for both corn, soybeans, and wheat. Corn came in at 724,000 metric tons. Wheat came in at 400,000 metric tons, and beans still doing over 1 million metric tons a week at 1.3 million metric tons. And as we've been talking about in the case of corn, we're probably going to see these export inspections start to increase and get above 1 million metric tons because our sales are certainly been strong as of late, and our outstanding commitments are exceptionally strong for this time of year. So these numbers are a little light. I would expect them to grow as we get in the next month or so.
Absolutely. We also had NOPA crush numbers out here today, 11 o'clock Central Standard Time. Let's turn over and take a look at the actual results. We had expectations of 162.673 million bushels crush for the month of January. What we saw released here was 162.675. That was very positive here. This is one of the strongest January months on record here, the strongest January month on record. You can see in 2014, the January crush here was 156.943. So this had a very positive effect on price action. We were trading a little higher going into this report. We started backing off a little bit. It seems as though we were able to have a very positive trade by the end of the session here today. But one thing I would caution producers on, when you look at this chart, this is a daily soybean chart. It is a candlestick chart, so each one of these bars is representing 1 day worth of price activity. That bar on your farthest to the right there, that is today's price activity, and you'll notice that we are able to close up over 10. One thing I want to caution producers on, though, is that we are still in that range of resistance here. You'll notice that we didn't have a specific pinpoint price that held support here in between that range that we traded between the end of October and the middle of January. So that is kind of a range of, it was a range of support. It turns into this range of resistance. So I would caution producers, if you are thinking of trying to play long or get exposed to some of this upside, we may see some resistance in tomorrow's price action. But I wouldn't be surprised if early on in the session we do get a little bit of a continuation, as we did have a very strong close up over $10.
Exactly. And on the other side of the spectrum, wheat had a very interesting day where we were trading substantially higher for most of the day, but then closed around the lows. And I think a lot of that was driven by the cold weather we're seeing, especially in the eastern Corn Belt, where the Illinois, Indiana, Ohio region is seeing below zero temperatures and potential for freeze threat there. So that gave the market a little bit of steam, but clearly it didn't hold. The underlying story continues to be we have plenty of wheat, so even these sort of temperature problems that we're worrying about in February are not going to likely keep this thing bullish for too long.
That sounds fair enough. Now also keep in mind that we do have option expiration for those March contracts. The last trade for options is going to be on Friday. Then we have first notice the next Friday. So the 27th will be first notice for those March contracts. So keep that in mind as you're kind of planning out your trades here over the next week. Thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call. The number is 877-472-4607. I look forward to hearing from you. Take care.